16.6 billion to 18.9 or 19 billion, a growth of 14%.
Well, and to literally separate the wheat from the chaff and talk to us about what exactly paid off for various institutions and what exactly didn't work, Ken Gishinga, Chief Economist at Mentoria Consulting. Karibu sana.
Thanks for having me, Peter.
Yeah, now looking at the slew of banks that brought back their reports, the results for 2017 during that week, some literally floundering, some which are used to returning profit year after year, not doing so well. Others like Equity Bank, which have taken a hit in recent times, but now turning around and posting a profit. Where do you think the magic has been?
In a sense, we expected this. We saw 2017 had a lot of challenges.
Yes.
We saw the interest rate cap, we saw the political environment, we saw the drought, and there were many other issues at hand. So we did expect that the banking sector was going to take a beating, and all the tier 1 banks, except Equity Bank,
yes,
reported a decline in profitability, and they all quoted a tough operating environment. That seems to be the phrase that they're using. But for Equity Bank, I think innovation for them has been a game changer. If you look at only a few weeks ago, they launched the Riziki cover, which gives non-cash benefits to Equitel subscribers. You see that kind of innovation. And to be honest, Peter, this is a bank that less than 15 years ago did not have a commercial banking license. And to think of it in the last 15 years, it's taken on the big boys and it's become the most innovative bank in the country. I think when history is written, the history of the banking sector in Kenya, I think Equity Bank we're going to be standing tall, especially on innovation, because all the banks just focused on lending.
Yes.
But I think for Equity, for them, they realized that lending was not going to be a big thing in 2017. So I think credit to them.
Yes. If you look at the entire banking sector, the economy as a whole, the fact that it has been said that a lot of financial institutions, be they banks, insurance companies, and the rest, still operate as if they're still in the 19th century. But we're starting to see, when we say innovation, new methods new methods of doing things starting to pay for various people. Where do you think the future in this lies?
I think the future lies in always thinking out of the box. I was part of Equity Bank at some point in my career, and I remember they had an innovation center where they brought in people with backgrounds in math, economics, physics, statistics, people who would sort of look into the future and say, if you remember the M-Kesho product, which was the precursor to M-Shwari, you know, that was a partnership between Equity and Safaricom. So for me, my claim to strategy has always been, is innovation at the heart of your strategy? And I think that's what's separating what you call the wheat from the chaff.
Let's talk Kenya Airways. Of course, we know that airlines usually are not expected to make much in terms of profit, a lot of them state-driven. But Kenya Airways, again, reporting a large loss. They expect things to start to turn around. Faced by the continued expansion of Middle East carriers, we're starting to see people like Air France actually flying out journalists tonight and having a big launch next week of their inaugural flight to Paris and back to Nairobi. Do you think they will be able to weather these headwinds?
It'll be very competitive. I'm glad they have the Nairobi to New York flight because if you look at the tourist statistics, a big chunk of tourists in Kenya coming from the United States. Some are coming directly to Kenya. Some are using Kenya to sort of like to connect to other destinations like Mauritius. If KQ can milk that for all it's worth, absolutely. But my word, it's going to be a very competitive environment.
Then let's look at the biggest story of the week, the signing of the free trade area agreement between 44 out of 54 African nations, something like that. And the fact that what stood out most was the fact that there were several countries, including Africa's largest economy, that were absent. Reading the tea leaves, what do you think this means for the rest of the continent in terms of business if we do achieve that? Is it achievable in the first case?
The African Continental Free Trade Agreement was first discussed in 2012. So it's taken about 6 years of extraordinary summits for it to come to life. The idea behind there was we need to create a single market, much like the European Union is modeled, and have access to 1 billion people. On paper, I think it's a very attractive proposition, but I think the big boys like Nigeria, I think what they realized is they might not be as competitive as in other parts of the country, because there is a lot of structural inefficiencies in Nigeria. I mean, typical 4-star hotel in Nigeria goes for about $700.
Yes, the power and infrastructure issues.
Power infrastructure. So I think they quickly realized that this might not be in their best interest. But if you look at countries like Kenya that have been trying to go up the competitive ladder in terms of doing business index, I think we stand to gain. I think we have a fantastic human capital in this country. We have a huge diaspora that's mostly in the US and in the UK. We need to take advantage of the diaspora in other African countries and use those linkages to push our products. And I think the embassies, the ambassadors need to be at the forefront of this.
Yes. If we can't even get the East Africa community right, we've seen the tussles between Kenya, Uganda, Tanzania, Rwanda, Burundi, the rest, South Sudan and others. If we can't get that right, how do we expect to get a free continental-wide trade area working?
Well, you'll never get it right, Peter. What really happens is you try and get as much as is possible. So we have two things. You have non-tariff barriers and you have tariff barriers. It's easy to remove the tariff barriers because that's pure legislation. But the non-tariff barriers, this could be softer issues around culture, immigration. Those are much, much harder to contain. So we're never going to get the European Union to this day still nags over who gets what. But I think the bigger picture here is we have been growing intra-African trade at 12%. Can we grow it at double that rate, 25%? Why are we enriching the Western powers when we have all what it takes within us?
Okay, indeed, of course, many people would then contend that the thing that mostly needs speaking about to start that rolling would be the Open Skies initiative and opening the borders for movement of labor and that sort of thing. But that is a conversation for another day. Indeed, Ken Gishinga, thank you very much for taking the time to talk to us.
Always a pleasure.
Asante sana. Now, we are at an end for, well, KTN Business Today for this week. Of course, we still have 30 minutes to go, during which we will be bringing you Trading Bell this week, featuring developments in the paint industry. You can tune in after the break to join my colleague, Apia Gina, and, well, Rakesh Rao, who is the CEO